Greetings and welcome to our inaugural 2025 education event. Thank you for joining. Today, we are going to share a lot of information in a short period of time. We're going to cover the fundamentals of managing two myriad regulations, compliance requirements, and risk management requirements regarding ACH when your ACH data is extremely difficult to source and almost as difficult to get organized. So I hope you're looking forward to that. My name is James Rowe. I'm a member of the ownership team at Affirmative. I want to introduce our esteemed panelists. First, we've got Kim Roberson. Kim, welcome Kim. Kim handles, she co-leads our product group with Scott. She also leads our implementation team. Kim is an accredited payment risk professional, and she's also a green belt. No, not in karate, but in Six Sigma. Kim has, believe it or not, and I don't believe it, she has been in the banking industry for 20 years. That doesn't look possible to me, Kim. She has managed payments groups at various financial institutions, regional banks, community banks, and credit unions. And we're very pleased to have her as part of our team. The other thing you might notice, if you look right behind Kim's left shoulder, you see a small airplane there. And that is there because Kim loves the Blue Angels. She's a big Blue Angel fan. So very exciting. It's on her bucket list to actually fly with the Blue Angels one day. Next, I'd like to introduce Scott Brown. Scott, as I mentioned, co-leads our product group with Kim. Scott is also responsible for our efforts related to information security. Scott has been with Affirmative for 12 years. He does look like he's been with Affirmative for 12 years. Sorry, Scott. Maybe it's because of what Scott did before his professional career that has given him the signs of wisdom and age. Scott was in the United States Marine Corps, proudly served his nation in Operation Iraqi Freedom. He's an amphibious assault vehicle commander, responsible for the lives of 3 other crew and 14 Marines that he would carry into battle. Scott's won the Navy and Marine Corps Achievement Medal, and he also received a Presidential Unit Citation. And we brought Scott on board, and I'll tell you this, of all the wonderful people I work with at Affirmative, if I actually had to go into battle, Scott's gonna be the one that I get to first. No offense to anybody else in the group. But we appreciate your service, Scott. Regarding Affirmative, we were founded in 1998. I can't verify for that because I wasn't born yet, but that's what I read. I've been a part of the team for 7 years here. We focus on helping financial institutions get their ACH transaction data organized into a usable format. That is often a very difficult process. It requires a great deal of expertise. We're going to talk a little bit about that today. We also help our financial institution clients manage their regulatory and compliance needs, and also manage the risk associated with their originator portfolio. So enough about Affirmative. Let's jump into the content. Kim, the first question for you is, would you mind giving us an overview of the regulatory environment for ACH, risk management for financial institutions?
Sure. So thank you, James. Yeah, you know, in the ACH world, there's a lot of guidance. There's a lot of regulatory. There's just a lot. And it can become, you know, increasingly difficult to navigate your way through that. And I'm sure you all know who NACHI is, right? They govern ACH. But then you have the FFIEC out there giving guidance. You have the OCC. You know, you have all of these external factors out there saying, okay, here's what you should be doing, right? But then it's up to you and your team or your department to get out there, to take that guidance, to take that regulatory, to take this NACHA book right here, right, and implement it. And, you know, once you have that regulatory items in place, once you have your risk management in place, you still got to be able to demonstrate how you're monitoring to this stuff. And that can become increasingly difficult also. And, you know, you've got, whether it's your internal auditors breathing down your neck, whether it's your payment association coming in to perform their risk assessment or their annual audit that they may do with you, or depending on the type of financial institution you are, it could be the NCUA wanting to take a look at, you know, your ACH origination portfolio, could be the FDIC. So there's a lot of factors that come into play, and a lot of different agencies, right, that come into play, or people that come into play with monitoring to this. And, you know, a few of the key factors that that you have to kind of prove, right, that you're monitoring to is, you know, that ACH volume, you know, your return rates. You know, it's not just unauthorized, it's your overall, it's your administrative. And you need to be able to explain and understand those variations, because you could have some sort of anomaly that happens out there, right? And when you have that anomaly, your board, or whoever, you know, all of this is filtering up to, that's running your oversight panel, and is helping make those strategic decisions for the financial institution. They need to know what this risk is and the why behind it. So they would be very interested to see why there's big spikes, big dips, that sort of thing. And, you know, at the end of the day, you got to be able to produce something, and, you know, you've got to understand it, and you've got to be able to take action on it.
So Kim, let me just clarify. I mean, I just want to feed this back to you in terms of who the key counterparties are. There's a lot, right? There's the OCC, there's the Fed, there's any financial institutions, external regulators are going to look at how the payment program is managed, and ACH is a key part of that, because I think it's the second biggest type of payment after cash. There's $90 trillion a year in ACH payments according to NACHA. But you've got the Fed, you've got the OCC, you've got NACHA as in terms of external regulators, right. And then there's internal regulators. There's internal audit. There are other various compliance units in the financial institution, and then there's the board of directors and senior management. So all of these folks, what you're saying is require, like us, the client, financial institution rather, to track very specific metrics on volume, transaction type, originator activity. And what's the main challenge associated with tracking all that for all of these various stakeholders?
So typically what I experience, you know, in implementations, and even from when I was at the financial institutions, is it's getting a hold of your data and making sure it's clean data, and then being able to organize that data and understand it. And that might kind of seem simple to some folks out there, but, you know, generally what you deal with is, you know, depending on if you have your third-party sender sending you your data, if you have your data being sent into your core processor, there's all of these changes that can kind of happen, right? When from the point the files are received to the point that they actually go out the door to the Fed or the EPN. And, you know, getting a hold of the right data, what actually went out the door, and then interpreting it. And especially, James, if you have, think about this, if you have 1,000 originators, how in the world do you look at it and say, I know what's going on with these 1,000 originators out there? How do I know who's high risk? How do I monitor to all of these when you've still got to get your ACH processing done, right? You've still got to get your board reporting done. It's just a lot in general that, you know, you got to do. And especially if you've got that larger origination program, it just becomes increasingly complicated to be able to know what's happening, what's going on, and knowing the risk and being able to report out that risk, to the powers that be that's making those, decisions of what your risk tolerances are, what your risk acceptance is.
Sure. So there's a couple of things, and I wanted to also mention to the audience, if you have any questions, feel free to submit those, and we will either address those in the flow, because we're going to end right at the bottom of the hour to respect everybody's time, or we'll follow up with you and get you answers. So feel free to submit those. We have some valiant assistants here to get those questions routed in. But let me get back to your comments, Kim. So the challenge here is, so there's a couple of different places. There's transaction data. There's both the transaction data that's submitted to the network, and there's transaction data that's on us data, internal.
Yes.
It's difficult to get that transaction data, even just get it, right? Some people have to work with their core. We're core agnostic, so we work with all the cores. But it can be a big challenge. There's also a way to get some of it direct from the Fed, which we're able to do, for many of our clients. But then it's more than just getting that transaction data. It's getting it grouped and organized by originator. You need to know, how do you aggregate transactions under a specific originator? There's third-party processors that you either declared third-party processors or nested, right, or hidden. So you've got to be able to sort all that out. There's being able to match returns to origination. So there's just an enormous complexity with getting the data into a format that can be then analyzed and reported on. And if you're not very good at doing that and it's not consistent, you're going to have a very difficult time meeting all of the various regulatory requirements. Is that fair to say?
You got it, spot on.
Now, I want to switch over to Scott, because we want to talk about some of the foundational reports that pretty much all of our clients use across the spectrum. I think we've probably got dozens, if not hundreds, that our clients use, because we can configure those to meet their needs. But let me just ask you: is there a story? I put you on the spot, so I'm sorry. Is there an anecdote that comes to mind of a client that was caught sort of not effectively managing risk or compliance needs? Not by name, but just, do you have any sort of example of a client, some of the things that happen to clients for not having those controls in place?
Yeah, so is that one directed at me, James?
It is. I'm sorry.
Okay, got it.
You passed the test.
So yeah, I have quite a few, and in the implementation world, I'm actively dealing with these financial institutions, and they typically are coming to us for a solution anyway. So I get the chance to hear the stories, to hear the stress in the voices of the people in the trenches actively having to deal with these audit findings. And one in particular comes to mind where they weren't effectively monitoring to limit utilization. And that's, the limits that they're providing out there to their originators. They did not have the right tools and resources in place, or the manpower, to be out there and actively manage to those and adjust the limits as the risk either increased or decreased with that originator. And then just real quickly, one other one is, I worked with a financial institution, and they were getting fined by NACHA for not working their NOCs. And I think a lot of us out there in the industry were like, oh gosh, we have these NOCs. It's this never-ending story. And it takes time, it takes resources, right? But you've got to have the visibility, first of all, and you got to know what you got to go out there and work on. And this financial institution, my heart went out to them, because they were actively getting fined by NACHA. And when you typically get a fine by NACHA, it's not cheap. So
yeah, no kidding. And the other thing I hear you tell me about a lot is when we go through an implementation, and maybe we'll do a session this year on our webinar series about our implementation process. But one of the things we find when we go through implementation, and in the event where we source the data from the Fed Connect, we go back to our clients and we tell them that their core wasn't submitting their transactions or processing their transactions the right way. We see data anomalies that were inconsistent with their expectations about how their transactions would be processed. So that actually helps them clean up things, operationally a little bit, but from being able to see that data in practice. So anyway, thank you so much, Kim. I want to pivot over to Scott, and what we're going to do is take a look at Scott's going to talk us through some of the key reports that our client, across all of our client base, and we serve FIs from, I think, 400 million in asset size up to 50 billion, 100 billion plus in asset size across the country. So we really have a wide variety. One of the things that's consistent is that they have this sort of core package of reports that they use to demonstrate compliance regardless of size and complexity. And Scott's going to walk us through that. I'm going to pull up my PowerPoint here, Scott, so we can actually look at a couple of the examples. Talk us through some of these, if you would.
Yeah, sure. Thanks, James. So these are the reports really that kind of address the auditing needs and the risk management needs that Kim was kind of pointing out. So we'll start with our foundation here, and that's our origination volumes and dollar amounts over time. Right? So this is how you're demonstrating that you have control and visibility into your program, that you're collecting this information, organizing it, and then being able to view it and share it and manage it. Right? So just a couple of the key points of when we're collecting this information, like what is it that we're interested in? Obviously, we need the transactions to know if they're debits or credits. We're going to want to record the date, and I recommend you get both the date the transaction was submitted to you and the effective entry date, because depending on your audience and the purpose of that, right, you're going to need to report on either value. If your program's originating on more than one routing number, so maybe you have a direct sender who's using a separate routing number that's managed by your institution, or you're separating lines of business by routing number, you're definitely going to want to know on which routing number that volume occurred. If you're managing third parties, you want that information. Obviously, you'll need to know which originator and probably SEC code these transactions went to. So that's where we start with the basic building blocks. How does this look over time? And most of the time, you're going to look at this monthly. You might look at it quarterly. You might look at it year over year to compare how you're currently performing versus how you were performing on that same time last year. But another report you'll use, same data, is what we call the volume variance or the amount variance. And that's just looking at the change month over month. And Kim made that point as well. That's a really good report to demonstrate, especially when you're doing, say, board reporting, to say, are we up or are we down? And how much? I like to do that one as a percentage. So volume trends and amount trends, I like to use the actual dollar figures, the actual count of transactions. When looking at the variance, I like to use percentages. And that allows me to compare, say, two originators who are in the same industry. If I have two homeowners associations, I can say, are they up 5%? Are they down 10%? How do they compare? And it allows me to do, really like for like metrics.
Yeah, it makes sense.
Go ahead.
Sorry, Scott. So like in these drop downs, I want the clients that I think find the most value out of our ability to do this are ones with A, a lot of originators, and B, a lot of different processors, because we're able to sort that out. But you can go into these drop down boxes and you can review this by down to the originator level, right?
That's correct. And that's really why you want to overcome that data challenge, that ACH challenge, is to get your data sorted so you can drill in. So you can say, like, we did 40 million transactions in January. Let me see how that breaks down by originator. Let me see how that breaks down by SEC code. So you really get a good feel for how your origination program is shaping.
And so you like just being able to demonstrate this, that you're able to track this at the originator level, that really is the challenge. It isn't necessarily printing out the reports or storing them. It's demonstrating and also using it for active risk management purposes, right? And a big challenge of that, back to Kim's data comment, I want to just connect the dots, is an originator might have multiple account numbers. And so if you're not good at grouping transactions under originator, right, then you're not going to be able to produce this information in a reliable or meaningful way. And so that's, you know, to your point, solving that data challenge puts you in a position to be able to do reports like this. The other thing I wanted to mention, because a lot of our clients, all of our clients use these basics, but one of the things we've done recently is integrated the ability to compare your credit and debits, your origination volume trends to the rest of the market, at least in our system. So you can see how you're trending relative to others. So that's an enhancement for a report like that. Why don't I go to the return rate side and let you speak to that a little bit?
Sure. So obviously, right, there's regulatory requirements. You have to be monitoring your return rates. Well, the way a lot of the institutions I talk to when they're onboarding are doing this is they're going out to the Fed, they're downloading the reports, they're putting them into Excel, and then they're looking to see who's gone over those thresholds. And that will certainly make you compliant, but it's a very reactive way of managing risk. We think a better way to do that is to record the returns as they come in. So this way, you're not waiting for the end of that reporting period to find out who's gone over those thresholds. You can take a proactive approach, and monitor on the 15th to see who's getting close to those thresholds. So as they approach them, you can take, proactive risk mitigation steps. If an originator is at 0.4%, 0.45% on their unauthorized, right? You can work with them ahead of time to make sure they don't cross over that, 0.5% threshold. They don't end up on a remediation plan. You're able to more proactively manage that risk.
Beautiful.
James, I'd like to add one thing also. And what I see when I'm out there talking to folks in the industry, when I'm dealing with like those implementations, is this is done manually. So it's whether it's the volume trackings, right? Every bit of it is manual for a lot of financial institutions out there. And the amount of time it takes when typically financial institutions, they run pretty lean in the departments anyway, or at least the ones that I talk to. And, when it takes days, it takes weeks to put some of this stuff together on a manual basis. And then you're at risk when you're doing it on a manual basis of transposing a number, right? You transpose something and that goes all the way up to the board. Yeah, there's going to be some questions.
Yeah, speaking to our expertise, our DNA is in ACH. We're experts in that. The company was founded as a software provider to payment processors that was used as their back office to bundle up all of their ACH transactions, nationwide payment processors, bill pay companies rather. And we, over the years, have the last 15 years or so, have focused on the financial institution market. But the point is, we understand ACH data. And if you try to have a project internally, let's say, or with others that may be, a little bit in ACH and other payment types, to be able to organize this data, bring it in, match returns, aggregate under originators, it's just the level of expertise isn't going to be there. We found in the past. So excellent comments. Let's move. We got about 7 minutes left, so let's cover these last two visuals. Top originator, Scott.
Yeah, so top originators is great. There's that regulatory requirement that you're looking at originators who may have an outsized impact on your organization, right? So this is kind of what that's demonstrating. It's like, we know who our top customers are by the number of transactions or the dollar values or their returns. And what I usually find most interesting about this type of report is you usually know who's on that left side of the graph, those top customers. They're very important relationships. It's really the bottom positions at 8, 9, and 10, that's where you see the movement as an originator's growing their business or something's changing in the marketplace. New originators come into the list. That just kind of puts them on your radar, and it lets you know, oh, look, First Payments is now in my top 10. They're growing their origination business. Let me just take a peek. When's the last time we did a review on First Payments? What do we have pre-funding based on their business, or do we have a settlement hold period set up? Just the kind of knowledge, that awareness of when are originators coming into that large impact on your organization, and then just the management of the risk that they bring with that activity as your customer.
Why don't we cover this one quickly and then hit the last the risk monitoring one?
Sure. Real quick use case on SEC codes. A lot of the time, financial institutions, with a lack of data, have to do their best by guessing. Like, how do I know if an originator is risky? Well, if they're a third party, or I'll say, if they do web, that makes them high risk. But with the actual information, like we see in the graph here, an originator portfolio might be 98% PPD and CCD and less than 1% web. Are they really high risk? Well, if we were to say, look, if they're doing less than 1% web, they have very low web return numbers and dollars on top of that, maybe we can now categorize them back down to the low risk category, remove some of that regulatory burden and reporting burden from us with a good, strong foundation for why we're making that change.
Excellent. And if we had more time, I would make a joke about the fact this must be one of our Roman customers because of all the Latin, but the originator names have been changed to Latin to protect the innocent, so to speak. I just made the joke, I suppose. Let's cover the last slide, portfolio risk monitoring and benchmarking.
Sure. So we talked about reactive reporting, things that happened after the fact. And we talked about proactive reporting, loading those transactions as they're coming in. By tackling this data challenge, you're going to get to move to the third step, which is really predictive reporting. And that's what we've done here as an example. We've built a UA model score. So this predicts the likelihood that an originator is going to have unauthorized returns in the future based on their previous and current activity. So rather than having to monitor an entire originator's portfolio, right, 3,700 originators in this case, we can say, focus first on these 12. These 12 are going to have unauthorized returns. Once you've addressed those 12, then you can further segment your population to figure out where does the next risk lie for unauthorized. And then the bottom tier, that 2,500 or so originators, highly unlikely that they're going to have unauthorized returns. So again, you can adjust your risk strategy appropriately for them to say, like, we can have looser controls. They're less likely to have unauthorized returns, and tailor your risk preferences and strategies based on the likelihood of returns in the future.
Yeah, that is tremendous. Let's see here. Let me get back to my screen. Well, there we go. That's tremendous. I just wanted to, we just have a couple minutes to summarize. I appreciate you showing those. I mean, the key challenge here is really sourcing the data, getting it organized, and then once that's done, and that's a very difficult thing to do, once that's done, then there's a set of reports that we start you out with that meet your fundamental needs, and then we have a process for configuring and adding reports that may meet your more idiosyncratic internal needs over time. And that last part that Scott mentioned, and we're going to do another event on this year. We're going to try to do one of these a month. We're going to cover the 2026 NACHA rule change. We're going to cover the implementation process, the steps we have to take to get the data organized. We're going to cover our predictive analytics, and that's what Scott has mentioned. Over the last couple of years, we've worked really hard. We see all these transactions and we anonymize them and we store them. We can see the good transactions and the bad transactions. And we've integrated machine learning into our systems that helps us identify the high risk originators. In other words, the ones that are the most likely to submit unauthorized transactions over the next 60 or 90 days. And that there's a requirement that every financial institution do originator reviews, and we help meet that requirement in a very innovative way. It's much better than doing a P&L review or other like non-direct sources of information related to the risk of the originator for processing unauthorized transactions. We just come right out and predict it for you. And then we categorize the originators by risk. And so that's available to you in the reporting. So I want to, in wrapping up, I want to thank Kim. I want to thank Scott. I want to thank our participants today for your patience and your interest. Please feel free. I had a slide, and our head of marketing is going to be mad at me that I didn't pull it up. We're going to be at the NACHA event in New Orleans. We have a booth. We have an event. We'd love to hear from you on that. We'd love to see you at that event. We'd love to have you reach out, and we'll communicate with you regarding the rest of our 2025 education series that'll be forthcoming. So thank you again for participating. I wish you a great day, and again, reach out if you have any questions or follow-up. Cheers.